let's devise an assumption from February 13th, 2025. DEVISE, spelled DEVISE, stands for divergence, exhaustion, volume, initiation, sponge, and excess, and is an acronym that I use to outline my edge. So for this video, we're going to look at DEVISE clearance at about 1:20 p.m. on February 13th, and I'm just going to go line by line, or letter by letter, some might say, starting with divergence. So there's a few different types of divergence I use. That's how to devise an entry document that I'm always throwing at you, gives you all the details around that. So yeah, I'm just going to outline the specific devise clearance that we got for this day. So divergence, in this case, I was looking at RSI. So if you check out my handy dandy little arrow here, look at that candle from about 8:30 a.m. and then look at the candle from our entry, which was at about 1:20 p.m., give or take a few minutes. And if you're like me, I skill into the position, so you may have waited a little bit until we got back up 6100, etc. But yeah, so the divergence aspect here, it diverged at about 1:20 p.m. relative to that 8:20 a.m. candle, making a lower low as price made a higher low. So RSI made a lower low at 1:20 p.m. relative to the low that it made here at about 8:20 a.m. Really 8:30 a.m. I think we had news that day. So that's a hidden divergence. Again, hidden bullish divergence is when RSI makes a lower low and price makes a higher low. So that is the D. So after that, I look at E, which is exhaustion. So I'm going to direct your attention away from that candlestick chart. In fact, we're just going to hide this chart altogether. I'm going to get rid of these arrows. Satisfy my neuroticism there. Let's just expand this window all the way. Okay, so exhaustion, aggressive selling occurred. So we're just going to be focused on these three candles here. Aggressive selling occurred as price retested the top of the 30-minute opening range. So if you're looking at the candlestick chart, you'll see that the opening range for that day was at about 60.89 was the top of that opening range. So that is a key level for that particular day. I don't have it on here because these are my updated levels for today. But if you look at the candlestick chart, or really any chart, you'll see that about 60.89 was the top of the opening range for February 13th, 2025. Aggressive selling occurred as price retested the top of the opening range. You see that here. You obviously see that wide candle. Most importantly, you see that delta gradient shows a burst that disrupts absorption at the low. So that was a swing low there. Yet it failed to follow through. Price did not follow through, and instead sellers faced a strong rebid. So note the lack of volume. I do like to see a big burst of volume as well. But a lack thereof here can be an equally important indicator because it shows that the sellers lack conviction. And if you watch this in real time, it's a very quick pop down there and pop back up. So that's the exhaustion. Volume was when the buyers lifted every offer, and like I said, they slammed price higher almost instantly. So you can see that on the DOM. This is obviously the chart's not running, so I don't show the DOM for these. If you want to talk DOM, just pop into either the comment section here, ask about it, pop to any of my live streams. But we do have the DOM, but I don't show it in these videos because that's kind of something you have to see real time. But if you're looking at that, you would have seen that the buyers lifted every offer and they slammed price higher very quickly there. So again, delta gradient going the other way. So you have the aggressive delta in the wicks here, which is met by these horizontal green bars, especially the darker green one here and here, showing both so if you think of the sellers coming in, that's delta in, showing the delta out, strong conviction. The other way, you see that with the widening candles, that's acceleration of price velocity. And finally, as we proceed here, boom, right there, you finally see that confirmation, that 4-bar fractal higher. And what is a 4-bar fractal buy? That is, so think of this as bar 1, bar 2, bar 3, bar 4. So the first aspect of that 4-bar fractal is the close of the current bar 1 is higher than the high of the previous bar, bar 2. So let's watch how this develops. Go. The close on that bar 1 is also higher than the high of 3 bars back. Check. And then finally, that's where you have your full add signal there. So anyone who's been watching me or reading me knows that I like to skill into position. So I will get involved as soon as you start to see these sellers here get offside. I know offside is a contentious term, but what that means is uh, they're on the wrong side of the aggression. So as soon as I start to see this aggression, I'll start to skill in, and then I'll add a full position when you get that 4-bar fractal. So that's the E, or the V rather. So we have the divergence via RSI, we have the exhaustion, which you can see in that delta gradient, and then you see the volume, which is just the delta gradient coming the other way, the widening candle, and finally that 4-bar fractal. So moving on to the I, initiation, this is the easiest one. Price has rejected that 60.89 level, the top of that opening range by 0.25N, which was about 3 points that day, so we're well above those 3 points. Like I said, that's why I like to scale in as soon as we see some of these aspects like the initiation. As soon as we got up to 92, you see that bit of aggression there. That's when I'm adding my, well, really, I actually started down here. So as soon as we saw this, as soon as I saw this guy here about 91, that's my first position. You see the 89, second, third was probably somewhere around the 98, and then finally I added the rest when we had that reclaim there. So the initiation part's easy. That's just price rejecting the level, in this case 60.89 by 0.25N, adding on, let's say 0.5N, etc. What is that N number? We'll look at that MGI document I'm always throwing at you, and you'll see that updated. You can use ATR. I like N because that's a volatility calculation. But the point is you're seeing the level be, some might call it a reclaim, some might call it a rejection, but you're seeing price retreat from the level by a few points. So that's the I. Sponge, strong absorption in this case occurred immediately. So as we were watching earlier, this all occurs really within 1 minute, where you see price go into that area of high liquidity and volume, and in this case a bullish sponge appears. It's a key demand level, and despite the high concentration of that seller delta, which is aggression from the sellers, buyers reinforce the bid, as you saw in the DOM, or you could see it on a candlestick chart, like a 1 minute, something like that. You can see what I'm talking about there. And then combined with that lack of volume mentioned above, we're seeing that price lacks interest in further downside. So just to review that one more time, the strong absorption occurs in that area of high liquidity and volume. It's a bullish sponge because it's a key demand level. There's a high concentration of seller delta, seller aggression, yet buyers reinforce the bid and pop us higher. So that's a sponge. And then finally, excess is a really good example of excess. We haven't seen an example quite this good, I don't think, in these videos. So I just want to show you. You can see the wick. So I'm going to remove this circle and add another one. See exactly what I'm talking about. This is the wick. We wick that opening range and we pop above it. And in this case, there's a lot of delta in that wick. So delta heavy wick, wick itself, that confirms potential excess. And you have all components of DEVISE, which again, divergence, exhaustion, volume, initiation, sponge, and excess. And that is a DEVISE assumption from February 13th, 2025.